Trading is the hardest easy thing to do. And what do I mean? Trading as an act is very simple. You simply tell your broker to buy or sell. You're not even placing the orders. Your broker does that for you. You're not even telling your broker. You're usually just clicking some buttons and they're doing it for you. So why is it that such an easy task, so many people lose money? In this video, I'm going to give you a simple framework to learn how to survive your first few months as a trader, how to learn and grow so that you can be successful. First, let's look at why most people fail. The big problem is they risk way too much per trade. They actually have no concept of risk management, and they just get into a trade and they don't understand where stop should go, where profit target should be, and they risk way too much and end up losing too much. They don't have any clear plan. Again, this is no stop losses, no profit targets. They just see a pattern they think looks good and they buy 100 shares. But where's the risk management in that? Where's your stops? Is that too many shares? Is it not enough shares? They don't know. They let their emotions take control. They see the price go in their favor and they get out too soon because they want to protect their profits. They see it go against them and they stay in because they don't want to lose money and they think maybe it'll turn around. And they don't understand probabilities. They don't understand that it doesn't matter if you're wrong 5 times in a row. If you have the right risk to the reward, one trade could make up for all those losses, and it's just a game of probabilities in the long run. So your goal as a beginner should be just to protect your capital so you can stay in the game long enough to learn. You need to make rational decisions, not emotional decisions, and you need to learn how to do this. It's very difficult. And you need to focus on process and not in profits. If you focus on the process, the profits will come. So what are you going to need? You'll need a small brokerage account. I would recommend anywhere from $5,000 to $10,000 would be a good starting point. If you're in US or Canada, you may need a larger account to avoid pattern day trading rules. You could do it with less, but I think 5,000 is a good starting point. You'll need an internet connection, then you'll need a trading platform. That's about all you need to get started. So how the system works. First, you only risk 0.5 of your account equity per trade. So if you're a $5,000 account, you can only risk or lose $25 per trade. Your profit target is 1%. So in the above example, if your risk was 0.5% to $25, you should be targeting $50 as your exit point. Your maximum daily drawdown should be no more than 1.5%. So 3 consecutive losses with no winners, if you're risking 0.5% per trade, would hit your 1.5 drawdown. Your maximum daily profit should be 2%. So if you had 2 consecutive winners with no losers and your profit was 1% on each, you'd hit your 2% target. And so this just kind of gives you a framework to ensure that you can continue trading for a long time. So I'll tell you how it works. So first, if we go back to the 3 things that you need to focus on. 1, you need to protect your capital. So in this system, you would need more than 180 losers in a row to draw down from $5,000 to $2,000. So that gives you lots of time to learn and make adjustments. The maximum daily drawdown and max profits protects you from over trading. And this is just the mistake beginners make where they think that, day traders are trading 50, 60 times per day. Most retail traders, they may only place 3 to 5 trades a day. Sometimes only 1 trade a day, but it's very small numbers. And it takes you time to understand that, but you really want to keep your number of trades to a minimum. And the 2-to-1 risk to rewards makes your winners more valuable than your losers. So you get to lose a few times and your less number of winners will make up for it. Next, it helps you with rational decisions. In fact, it forces you to make rational decisions because you have to follow the framework. Your stop loss has to be, 0.5%. Your profit target has to be 1%, and you're not allowed to get in or out of the trades unless those criteria are met. It forces you to get out of trades if you're showing a loss rather than holding on to them and hoping for the winner. And it keeps you in trades until you hit your profit target. And if it gets close and it comes back and hits your stop, that's fine. That's what happens in trade. It forces you to focus on the profits and not profits. You have to have the discipline to follow the system. And if you can grow that discipline later on in your trading career, it will come back to you because you'll have new systems you're going to use, but they all require discipline to follow. Next, it creates a framework so you can follow it and then you can review it and make adjustments. And if you haven't seen it already, you should check out my video on the daily report card. And this is all about that review and making adjustments process. And it's probably the number one video I would watch after this one so that you can take the next step. Next, it allows you to improve slowly without worrying about capital. So again, you're just focusing on the process, not have to worry about the money. You have hundreds, probably thousands of trades before you run out of money if you follow this well. It forces the concept of stop losses and profit targets, and these become very valuable later in your trading career. You need to know where your stop loss goes. You need to have profit targets, and this introduces a very simple way of 0.5% loss, 1% target. But you have to think about it when you're taking the trade. And we'll take a quick look at the math behind this. It's very easy. If you get 2 units of winning per trade, so 1%, and you only lose 0.5% to your loser. So your break-even win rate is 33%. 1 win covers 2 losses. It's very straightforward. But if we take that math a little bit further, we can look at how you're going to improve once you get good at this system. So this is a table that shows you probability expectancy in our units. So this is if you risk $25, this is how much you expect to get back. So right now you are about here. Your win rate is around 30% and you have a 2-to-1 risk to reward. So you're about break even. Right now it's minus 0.1, but if you're at 33%, then you probably have 0. So there's a few ways you could improve. One, you could increase your win rate. So you could get better at picking stocks and you could, improve your winning percentages and you'll see that your expectancy goes up. Another way you could do it is you could improve your risk to reward. Rather than getting 2-to-1, you could aim for 10-to-1. And now, you still have the same win rate, but when you win a lot more. Or what you could do is maybe focus on improving them both by a little bit. And you'll see these arrows are a lot shorter because there's a lot less improvement needed to get to these areas. So this is where I would focus on, is moving down towards the middle of the chart rather than going along one axis. That is perfectly doable. You can just increase your win rate and keep it at a 2-to-1 risk to reward, or you could go for that 10-to-1 and a 30% win rate. But these become harder to do. So I find it's easier, and the path of least resistance is towards the middle of the chart. So let's talk about how we can accomplish these things. So how do you improve by increasing your win rates? Well, you need better entries, better market understanding, better pattern recognition. And one of the other videos I had to check out is the secret system that focuses on the playbook, the trade log, and the trade review, and how is a system used to start getting that better entry, better market understanding, better pattern recognition through the use of a playbook and review. So how do we improve by increasing risk to reward? Well, 1, let your winners run. Hold on to them for longer, hope they go higher. The next is trading on a higher time frame. You'll get bigger moves on a higher time frame, but with those bigger moves, you're going to need better trade management. And what I mean by that is you'll need to know better where to put your stop loss. On the higher time frame, the move is bigger, but it could go against you for a little while, a bit longer than it would on the smaller time frame. So you might have to have a wider stop, and your profit target is going to be further away. So you're going to have to understand, where those need to be in relationship to each other to get that better risk to reward. So the key takeaways here is you need to protect your capital first. And the 2-to-1 risk to reward is very beginner friendly for this. It helps you focus on just the process and not worry about that capital, because you don't need to be right often, just about every 3 times. And then you just need to have patience. Your skill will increase over time, and this system will protect your capital for long enough that you have the time to learn. So remember, survival becomes before success. All right? You have to learn to survive before you can thrive in trading. Consistency beats excitement. Doing the same thing over and over and over again is boring, but it's predictable, and you can learn what works and what doesn't work. It's not as exciting as getting into a huge fast move once, but it is what makes you money in the long term. And last is risk management is everything. This is your sole job as a trader, is managing risk. Like I said at the beginning of the video, all you do is tell your brokers to place orders. You're not even doing that. You're not placing the orders on the market. They're doing it for you. You're just telling them what to do. All you have to do is manage your risk, and you will be a successful trader. So I hope you learned something in this video. If you want to learn more about what plays you can use and like your playbook and what trades to actually take, you can check out my other videos. I have some very good content around that, and that will help you get started, and then you just implement this system. I hope to catch up with you next time. Make sure to subscribe to the channel.